The following program is sponsored by Freedom Financial Group, Greater Birmingham's premier retirement planning specialists.
Welcome to Retiring Well, where it's our job to help you enjoy financial security in any economy. All right, we have got a great show lined up for you today. We're talking about how to get a decent return on your safe money. Really important topic with interest rates where they are. So sit back, relax, and enjoy today's show.
Retiring Well with Michael Reese, providing financial security in any economy. Today is the day you can take control of your financial future and eliminate worry about your money forever. Retiring Well with certified financial planner and retirement planning expert Michael Reese.
All righty, how in the world are you supposed to get decent rates of return on your safe money? That's a question that millions of retirees are facing these days, and even if you're not retired, it's a question you're probably asking as well. So what I want to do is, before we kind of jump into this topic, I first want to check out what's in the news. Alrighty, this week in the news we have from the Journal of the American Enterprise Institute. The title is The High Cost of Low Rates. And what they're talking about is this. They're saying monetary easing combined with the promise to increase both GDP growth and interest rates would jumpstart the stagnant economy. They're saying in a recent Wells Fargo Gallup survey, 1 in 3 investors report that low interest rates have forced them to delay retirement. So what they're saying is about a third of the people that were getting ready to retire have chosen not to do so. They've chosen to continue to work because low interest rates, interest rates are so low, if you will, that they can't afford to retire. And it goes on, 42% of people 42% of people now investing say that low interest rates have made them doubt that their money will last as long as they do. They're worried about running out of money. Nearly 40% of retirees, those who are already retired, have report reduced consumption because of low interest rates. What does that mean? It means they're spending less money. They're buying less stuff. These low interest rates are affecting those who are retired, those who are working towards retirement. People are desperately looking for answers. And one of the big mistakes that people are making out there is that in order to get higher returns, what are you doing? You're out there chasing risk. You're increasing the risk of your investments to get better yields. Folks, that's a really bad idea. In fact, that brings up our lesson of the week. Don't chase risk to get better yields. Again, I'm going to say it one more time, lesson of the week. Don't chase risk to get better yields. You know what happens when you do that? 2008 happens. The minute you're chasing risk, you get out there, before you know it, you have a little more risk than you think, 2008 hits, and boom, it all crashes down on you. Well, guess what? That's not good enough. That's not how you enjoy financial security in any economy. So what we're going to talk about today is, number one, what doesn't work. And then, of course, we will share with you what does work. So you're really going to enjoy this. We've got a great show lined up. So coming up, don't go away, coming up after the break, we're going to jump into the top 10 things that people are doing they think are safe that aren't safe at all. I think you're actually going to get a laugh out of this one.
Let's talk about retirement income. Studies show that a large number of retirees are worried about running out of money. Broken promises from banks, Wall Street, and the folks in Washington, D.C. may have you worried about your own retirement security.
Secure, predictable income is the key to protecting your retirement. You want your retirement income to be based on math, not markets.
It's one more reason that now, more than ever, you need to talk to a retirement planning specialist. Why not call the number on your screen right now? We'd love to talk to you about protecting your retirement. You've worked your entire life to become financially secure so you can enjoy a comfortable retirement. But when you get there, what's next? Wall Street and the financial media flood the airwaves with information about what you should and shouldn't do. But who are they working for? Who can you trust?
For the past 17 years, I've focused on helping people just like you protect and preserve their retirement security. And during that time, I've identified 7 different lies, each with the potential to destroy the security that you've worked so hard to build. I believe that you deserve to know the truth. And so I've built a website that hosts a series of videos that's free of charge that you can watch in the comfort and safety of your own home.
You don't want to miss out on these powerful videos that shine the light of truth on what can be a confusing topic. Why don't you go there now? It's absolutely free, and you'll be glad you did. www.retirementincomelines.com. You deserve to know the truth. Let's talk about safe places for money that earn a decent return. You want your money to be safe. That makes a lot of sense in today's unsettled economy. But everywhere you look, you can't find a place that pays you a reasonable amount of interest. It's frustrating. That's where we come in.
Secure places to earn a decent return are available if you know where to look. We evaluate them every day.
It's one more reason that now, more than ever, you need to talk to a retirement planning specialist. Why not call the number on your screen right now? We'd love to talk to you about protecting your retirement.
Welcome back to Retiring Well, where it's our job to help you enjoy financial security in any economy. Okay, we're talking about safe money and how you can get a decent return. I like to have a good time sometimes, right? We all do. So I have in front of me what I think is one of the funnier articles that I've ever come across. So here's what I was doing in preparation for this show. What I did is I went on to Google, because that's where we do research nowadays. One of my friends, in fact, recently showed me a picture of a library with a little caption that says, "Do these even exist anymore?" with Google, right? So everybody goes to Google for research. And so here's what I did. In preparing for the show, I went to Google and I typed in safe investment alternatives, right? Because that's what people are looking for. They're looking for alternatives to get a better rate of return. And when I did that, I got on the very front page, I got this great website from the Discovery Channel of how stuff works. I don't know why they think they know the answers here, but apparently they do. By the way, another lesson of the week might be, don't believe everything you read online. So here we go. These are the top 10 reasonably safe investment alternatives according to the Discovery Channel. I'm just laughing thinking about these. We're going to have fun with this. Here we go. Number 10, art. Yeah, art. They say fine art can be a good investment because historically, the price fluctuations in the art market don't reflect the ups and downs of the stock market. Okay, now wait, let's stop right there. We are talking about, remember, safe investments. Safe investments mean your money is safe. It's protected. It's insured. You don't lose principal. And already, what do they say in the first sentence? That there are price fluctuations. Do you know what price fluctuations mean? It means, yes, you could make money, but you also lose money. It goes both ways. So already they're telling you, hey, this isn't really safe. So it's kind of the oxymoron of the world. So art is number 10. So I thought that was fun. Number 9. This one might be my favorite one. Number 9. Investors in fine wines can expect to make a steady return. I'm sorry, all I can think about when I think of investing in now I know what you're doing too. You're doing the same thing I'm doing right now. You're sitting there thinking, wait a minute, if I invest in fine wines, what happens if somebody drinks it, right? I mean, how do you fix that? You just drank my investment. Again, it's like art. You can make money. We're not saying, look, I'm not saying you can't make money. You can make money in art. You can make money in wine. But you can also lose money. These are speculative investments. They are not safe alternatives. Number 8, coins. Yeah, well, right now we all know that gold, silver coins, they're all the rage, right? Well, let me ask you this. Are you old enough that you remember buying gold and silver in the 80s? Remember buying gold and silver in the 80s? How'd that work out for you? Yeah, or if you know anyone that bought gold or silver in the 80s, you know what? Everybody lost their shirts. Gold was way up here when they bought it, and then it crashed and burned. It stayed down there for 20 years. I'll tell you what, can you make money in gold and silver? Yes, you can, but is it safe? By no means is it safe. Let's go to number 7. So we've got art, we've got wine, we've got coins. What could they come up with next? Commodities. Yeah, there you go. Commodities are safe, right? No, commodities, wheat, corn, grass, oil, soybeans. No, these things commodities are about as risky as they get, but they go further. Number 6, private equity. Private equity, this is where you invest in a company that is not traded publicly. Now, I'll tell you what, I have several clients who have invested in these private equity companies. Every single one of them have lost 100% of their investment. How do you call this stuff safe? I don't even know. I'm just having lots of fun with this. This is great. Number 5, hedge funds. Yeah, they're safe. Hedge funds. Hedge funds. I mean, how is this a safe alternative? Again, we all know very risky stuff. Number 4, managed futures. Now, you may not know what managed futures are. Similar to hedge funds, managed future funds are run by fund managers who pool investors' money and invest it in various financial instruments, right? Basically, what are they doing? They're betting on interest rates movements, which means sometimes they win, sometimes they lose. Same thing. Safe means your money is protected. It's insured. This is not protected and insured. It's just throwing the dice. How about this one, number 3? Venture capital. Yeah, we know how well that works out for everyone, right? Venture capital. Yeah, a lot of venture capital money went into Facebook before it went public. And the day it went public, it then dropped like, I don't know, half of its value. I mean, come on. You can lose money. It's not safe. Financial derivatives are number 2. Options. Yeah, come on. That's just a joke. And then the number 1 safe place for your money, the number 1 safe alternative, rather, according to them, real estate. Oh, yeah. Talk to the folks in, Nevada, California, Florida about how well that worked out for them. You know, here's the deal. It's fun to talk about all these folks or all these ideas of safe alternatives. They're not safe. I mean, they're getting a little crazy here. I mean, it's almost a joke. What you need to be looking at are alternatives where your money is safe, where it is protected, where it is insured, where you can actually get a decent return on that money. And I don't want you to go away because coming up, that's exactly what we're going to talk about.
Let's talk about a customized retirement plan. Retiring today is not what it used to be. What works for your neighbor may not be best for you. Yet everywhere you turn, it seems like financial firms are giving cookie-cutter advice.
Your circumstances are different than anyone else's. We believe a plan should be customized to fit you instead of trying to squeeze you into a pre-built model.
It's one more reason that now, more than ever, you need to talk to a retirement planning specialist. Why not call the number on your screen right now? We'd love to talk to you about protecting your retirement. Let's talk about retirement income. Studies show that a large number of retirees are worried about running out of money. Broken promises from banks, Wall Street, and the folks in Washington, D.C. may have you worried about your own retirement security.
Secure, predictable income is the key to protecting your retirement. You want your retirement income to be based on math, not markets.
It's one more reason that now, more than ever, you need to talk to a retirement planning specialist. Why not call the number on your screen right now? We'd love to talk to you about protecting your retirement. And now, Ask the Expert, featuring financial advisor Tad Hill.
Okay, today we're talking about how to get a decent return on your safe money. Yeah, I'm just curious, in your community, what are you hearing people saying is safe out there? What do they believe is safe? And, Does that give you any concern, and if so, why?
This is one of the most important topics that we can discuss as it relates to retirement planning. And I want you to remember, we are retirement planning specialists, so our strategies, our topics are designed to help you understand how to protect your money in retirement. One of the things that's very common is that people think investments like gold or silver are stable. But you have to remember, gold and silver are commodities, very volatile. I was meeting with a couple from Vestavia Hills a few weeks ago, and they were recounting the experience they had in the 80s where they had bought a lot of gold thinking the same thing that people are telling us today, and then all of a sudden the bottom dropped out and it took them 20 years to get back to where they were. Same thing with things like blue chip stocks. I mean, even Berkshire Hathaway was down 50% in 08. If we're trying to protect our money in retirement, is that really a good approach?
So, given all of that, what are you recommending to the people you talk to when they're looking for having money in a safe place, but they still want to get a decent return?
Well, that's an interesting question. And the truth of the matter is we have to be very conscious of what we want your dollars to do. Because investments are like medicines. They're designed to do different things. So we don't want to put all your money in one place. But if the question is, what are some safe places for your money? The number one rule of thumb is somewhere where it won't go backwards. If the market goes down, if we have a crash in the market, we know that this account won't experience that. So there are a handful of places to do that. You can put your money in banks, governments, insurance companies, that sort of thing. But we have to look at where can we get a decent rate of return. So we have to be very selective about the type of accounts that we use and how it goes about earning interest, because some will do more than others.
Do you have anything else that you'd like to add on this topic?
One of the core points I want to make here, and I want you to take away from today's segment, is that once we retire, we've amassed all of the wealth we're ever going to have. Unless you're going to inherit a lot of money, you've got all of the savings that you're ever going to have, and you don't have 40 years to make it back up. So protecting your life savings really is job number one. Then we have to make sure that we can generate secure, predictable income that will last for both lifetimes. After we take care of that problem, we've laid down the foundation of your retirement plan. Then we can look at other areas like outpacing inflation, taking care of estate planning. Investments are like medicines. They're not all designed to do the same thing, so we have to be conscious of what we're trying to accomplish.
Alrighty, the time has come to share some solutions with you when it comes to safe money. And by safe money, I mean where your principal is safe and insured, where when you put your money in, you can have confidence that you're always going to get it back. So when it comes to safe money, where can you put it where you get a decent return? Well, you know what? There's really only 3 places that qualify as recipients of safe money. You can give your money to a bank, right? That's CDs, savings accounts, that kind of thing. You can give your money to the government, where you get bonds, treasury bonds, savings bonds, inflation bonds. Or you can give your money to an insurance company, fixed annuities, life insurance, those types of things. What's kind of interesting is back in the 80s, single premium life insurance used to be a big place for people to put their safe money. Then it kind of went away. What's funny is today it's coming back a little bit. My point is this: you do have options, but what you want to do is what I tell you all the time to do. And that is, you want to talk to a retirement planning specialist, someone who has expertise in this area. So here's what I want you to do. I want you to call the number on the screen. And when you call that number, just let them know. Leave a message. Say, I want to talk to a retirement planning specialist about safe options for my money. You'll be connected with a retirement planning specialist, and I promise they will be helpful for you. You make sure you want to do that. The other thing that you might want to do while you're at it is you might want to check out our website, retiringwell.tv. On that site, we have free reports, and one of the reports that I actually wrote is titled Safe Investment Alternatives for Your Money, and it's right there on the screen. And what I encourage you to do, go onto the website. You can download that report absolutely free. It's only 3-4 pages. Why not download it? Read it. That way when you talk to your retirement planning specialist, you'll be better educated as to what your options are. This is one of those areas, like a lot of areas, where you have nothing to lose and everything to gain. Why not get that second opinion, talk to a retirement planning specialist, and get some decent returns on the safe money that you've worked so hard to accumulate? All right, coming up, we're going to talk about an IRA blow-up.
Let's talk about safe places for money that earn a decent return. You want your money to be safe. That makes a lot of sense in today's unsettled economy. But everywhere you look, you can't find a place that pays you a reasonable amount of interest. It's frustrating. That's where we come in.
Secure places to earn a decent return are available if you know where to look. We evaluate them every day.
It's one more reason that now, more than ever, you need to talk to a retirement planning specialist. Why not call the number on your screen right now? We'd love to talk to you about protecting your retirement.
Hi folks, Michael Reese here. I'm staying with my good friend Tad Hill. Now, if you live in the greater Birmingham community, I've got to tell you, I think you should count yourself fortunate to have someone like Tad available in your community. Now, you may not know this about Tad, but he and I both belong to a national group of retirement planning specialists, and we get together, 2-3 times a year simply to share ideas and how we can help our clients. Tad's probably given me as many ideas as I've given him. Tad, do you mind taking a moment and sharing with the folks what you specialize in at Freedom Financial?
Well, really the bottom line, Mike, is that we help our clients protect their retirement. Our strategies are designed to give you peace of mind so that you can live the lifestyle you're accustomed to without having to worry about where your income's coming from.
Folks, if you're in the greater Birmingham area and you have at least $250,000 saved for your retirement, I encourage you, call the number on the screen to talk to Tad.
Let's talk about a customized retirement plan. Retiring today is not what it used to be. What works for your neighbor may not be best for you. Yet everywhere you turn, it seems like financial firms are giving cookie-cutter advice.
Your circumstances are different than anyone else's. We believe a plan should be customized to fit you instead of trying to squeeze you into a pre-built model.
It's one more reason that now, more than ever, you need to talk to a retirement planning specialist. Why not call the number on your screen right now? We'd love to talk to you about protecting your retirement. You've worked your entire life to become financially secure so you can enjoy a comfortable retirement. But when you get there, what's next? Wall Street and the financial media flood the airwaves with information about what you should and shouldn't do. But who are they working for? Who can you trust?
For the past 17 years, I've focused on helping people just like you protect and preserve their retirement security. And during that time, I've identified 7 different lies, each with the potential to destroy the security that you've worked so hard to build. I believe that you deserve to know the truth. And so I've built a website that hosts a series of videos that's free of charge that you can watch in the comfort and safety of your own home.
You don't want to miss out on these powerful videos that shine the light of truth on what can be a confusing topic. Why don't you go there now? It's absolutely free, and you'll be glad you did. www.retirementincomelines.com. You deserve to know the truth.
Welcome back to Retiring Well, where it's our job to help you enjoy financial security in any economy. Okay, we've reached the end of our show, and in the last segment of the show, I always like to share a story of an IRA, a 401k gone wrong. It's what we like to call an IRA blow-up. Okay, this week in our IRA blow-up story anyway, we have a great story of a budding lawyer who loses his first case, his very own. Now, why again do I talk about these stories at the end of every show? It's because IRAs, 401ks, we believe that they're simple plans. I mean, how hard is it, right? You put your money in, you pick your investments, away you go. I mean, how hard is it? Well, here's the problem. All of these plans have their own little rules, and if you mess up a little rule, the next thing you know, bam, it blows up on you. In our story here, we have the story of John McGovern. This guy is a Villanova college law student. So he's a law student at Villanova University. Anyway, he was working for the federal government. He has a 401k plan. They call it their thrift savings plan. It's like a 401k for federal employees. And he decides he's going to leave his government job and go to law school. And that's what he does. So he's got about $30,000 in his 401k the TSP, the federal government's version of a 401k. And what he does, he takes that money out, puts half of it back into an IRA, 60-day rollover. He does that properly. The other half he spends on his college expenses. Well, he files his tax return and he says, hey, he paid tax on the other half, but he didn't pay the 10% penalty because he's under 59.5. He said, oh, but I don't owe that because I used that money for college. Okay, sounds pretty good on the surface, right? Well, here's what happens. The IRS comes a call and they say, hey, John, you owe us the 10% penalty. John says, no, I don't. I used it to pay for college. Well, the IRS says we don't agree, and they take him to court. And so John here, he's this Villanova law student, so he figures he's smart enough to go ahead and represent himself in court, in tax court, and that's what he does. And he tells the tax court, he says, hey guys, here's the thing. I used the money for college. That's one of the exceptions to the 10% rule. I shouldn't have to pay the 10% tax. And that's when the IRS came in. They said, now, whoa. When you pulled that money out of your TSP, there is no exception for 401k plans or TSP plans for 10% of the 10% rule for college. That 10%, that exception only applies to IRAs. John said, well, what's the difference? IRA, 401, they're the same thing. And here's what the tax court said. They said the Supreme Court has observed repeatedly that while a taxpayer is free to organize his affairs as he chooses, nevertheless, once having done so, he must accept the tax consequences of his choice. In other words, hey, you didn't follow the rules, John. You got to pay the tax. So there you go. That's our IRA blow up of the week. Yet another reason to talk to a retirement planning specialist. All right, that's our show. We'll see you next week.
The preceding program was sponsored by Freedom Financial Group, Greater Birmingham's premier retirement planning specialists.